Want to talk about a common question most lawn care companies as they evolve and start to look at different ways of looking at their finances and accounting. So there's two main ways that we're looking at our accounting inside our QuickBooks. One is a cash-based accounting, and one based is an accrual-based accounting. We'll talk about a modified cash basis accounting in a next video, but the two main ideas that we're looking at is our cash accounting and accrual accounting. Cash accounting is going simply in saying when you get paid or you pay an expense, that's when we're recognizing the income or the expense. Most lawn care businesses are going through a GAAP or a generally accepted accounting principles process called cash accounting. And the reason being is the taxes are only being paid on the income that you actually receive when you receive it, and we're only paying for the expenses when we pay them. All fine and good for looking at it based on your tax purposes. And if you're looking at your accountant, the other thing that we may be looking at is taking your equipment at the end of the year, buying a large piece of equipment and accelerating the depreciation immediately in that year instead of amortizing it or depreciating it over 5 years. As a normal principle, with some tax laws, you can accelerate that depreciation. But what we're seeing is when we're looking at our profit and loss and QuickBooks in a cash basis, if it's not handled properly, you're not going to get a true picture in a cash basis of when the income was actually generated and the expense associated with it. To compound things, especially if your equipment is living on the balance sheet, which it is, if we accelerate that depreciation, you are possibly missing that expense over the lifetime use of that piece of equipment, and you're not recovering it in your overhead recovery or billing model. So cash accounting, in my opinion, is great for your taxes. It's generally accepted accounting principle. It's great, but we do need to have a conversation with our accountant to understand the difference between the cash and accrual and how we are looking at it from a budgetary standpoint. So if you're looking at your profit and loss right now in a cash accounting system and you're seeing a spike up and down here, that is my guess is probably, after looking at hundreds of these each year, it's attributed to you've actually done the work in the previous months, you've received the income a month or two later, which spikes the income, and the expense, the materials, the equipment, and the labor have all been paid out before you get paid. So we're not properly aligning the revenue with the expense. One of the dangers of a cash accounting system for at least budgeting, forecasting in a lawn and landscape company.